Warning, falling coconuts, insurance hazard. You know, I heard a story once where a coconut fell on somebody's head and they actually killed him. Today I want to talk about the most dangerous and probably the riskiest type of homeowners insurance you've never heard of. It's called non-admitted homeowners insurance companies / policies. So to give you an idea of what this is, a conventional insurance company is backed by what's called a guarantee fund. They're also supervised by the government pretty closely. You know, the states monitor the quality of the insurers. They also review contracts and they limit price hikes. And conventional companies are also backed by what's called a guarantee fund. And this means if the company goes bankrupt, then customers will still get their claims paid. However, non-admitted insurance companies do not have any of those protections. And they're more commonly found in commercial real estate, and they were basically designed for properties that have very rare risk profiles. Think of something like a fireworks factory or a nuclear waste project, something like that. But because the frequency of natural disasters have been picking up in many areas across the country, a lot of conventional insurance companies no longer want to write policies in these areas. And this is not just in Florida, guys. A lot of people immediately think, well, that's just a Florida problem, Michael. Nowhere else is facing this. That's not true. This is happening in California, it's happening in South Carolina, it's happening in Georgia, it's happening in Louisiana. There's a lot of states that are facing this problem right now. And the problem is, since there's hardly anybody left to write insurance policies in these states, most people are left with either the insurance companies of last resort in their state, or they're forced to go with one of these non-admitted insurance companies and take this massive risk. Now right now, non-admitted insurance companies only make up about 2% of the entire insurance market, so it's not a giant piece of the puzzle yet. And to give you an idea of how much the premiums have been going up, between 2022 and 2023, non-admitted home insurance premiums went up 27.5% compared to 13.8% in the conventional insurance market. In Florida, the non-admitted insurance policies grew 73% to more than 92,000 at the end of 2023. And as much as that sounds like a lot, it actually used to be a lot higher back in 2019. It was 155,000. So that's actually a good sign for the state of Florida. And actually, somewhere else has it worse than Florida, and that is California. California has more non-admitted insurance policies than any other state. They're sitting at a little over 153,000 right now, and the number of non-admitted insurance policies has gone up 200% over this past decade. Now, these type of insurance companies have been around for a very long time. It's not like this is a new type of company. However, insurance brokers in the past, would never even think about recommending a company like this to anybody. It was basically kind of like a taboo subject. But now it's becoming commonplace due to how difficult it is to insure different parts of the country. And they say, well, you can look at this two different ways right now. You can say, on the one hand, the insurance market is working how it should, and you have people coming in to insure areas that no one else will insure, so the private market is thriving there. Or you can look at it as these areas are so risky that no one should even be living there anymore because conventional insurance won't write in those areas. You can look at it however you want. In fact, where I live and where I'm walking through right now would be considered one of those areas. If they just told everybody, hey, you can't live in Miami Beach anymore because it's just becoming too risky to write insurance policies here, I think that wouldn't go over too well with a lot of the residents. They probably wouldn't want to just leave because of that. And it can be very easy to be fooled, and you might not even be certain if your company is an admitted or non-admitted insurance company, because a lot of the big insurance companies like AIG and Berkshire Hathaway, American International, they all have non-admitted subsidiaries of their company. So you might think you're insured with AIG, but you're actually insured with one of their non-admitted subsidiaries that could be significantly more risky to you. But even those companies, even the non-admitted insurance companies that are tied to these bigger names, are slashing their policies and getting rid of people like no tomorrow because of the risk. And the problem is that opens the door for smaller and newer companies coming in to just sell you insurance, and it looks like, wow, great, I'm getting this great solution, I'm getting cheaper insurance, but in fact could end up being inferior coverage or maybe no coverage at all in the event of a storm. And we got our first crazy listing for the day. This house was sold back in 2020 for $8.5 million. And then they said, well, it's been 4 years, so now it's worth 3 times more. So we're going to list it for sale at about $21.3 million. That's not going too well. And then they decided, well, we'll list it for rent instead at the low price of just $100,000 a month for anybody who wants to rent this. So no big deal, guys. You can just move on in for more than a year's salary for what most people even make. Now, when you take a look at this graph here, it kind of illustrates what I was talking about a little bit ago. You can see the rise and fall of the amount of non-admitted insurance policies in Florida and in California. Florida is the pink line and California is the white line. And you can see they both went up pretty substantially between 2010 and 2018. Then they both started coming down. But interestingly enough, as of 2022, the policies have skyrocketed again in California and have still been on the steady decline in Florida, which I find surprising because clearly both states are highly prone to disasters. You know, here we have hurricanes and flooding. In California, it's definitely the fires that's causing this, but also earthquakes too, but it's mainly the fires. And this is an interesting map of Florida here. You can see these are the average premiums for people in 2023 who have a non-admitted policy in Florida. And actually, the darker it is, the cheaper it is. And to my surprise, the most expensive county in all of Florida for non-admitted insurance is Palm Beach County at an average of a little over $12,000 a year in insurance premiums. But here's something interesting. According to AM Best, which is an insurance rating company, they're considered to be the best in the business, giving the most accurate ratings to different insurance companies. They actually say, according to their data, the bankruptcy rates between admitted and non-admitted insurance companies are no different. So there's no reason to believe that non-admitted insurance companies are any more likely to fail than your admitted insurance company. So that might give a lot of people peace of mind, thinking, well, you know, I'm just as at risk of the company failing as I am with my other company, but at least if they do fail, then you're going to be guaranteed to get your claims paid, whereas in the case of a non-admitted company, you don't have that guarantee. So for example, if there's a big disaster and there's thousands of claims all at once that causes a bankruptcy, there's no guarantee fund for the non-admitted companies, which means that you're going to be on your own for everything. And all the insurance that you were paying is just wasted money. Because basically how these guarantee funds work is it's similar to how the FDIC works in the banking sector. Okay, you have insurance companies that have to fund their guarantee fund. These guarantee funds will make sure that homeowners' losses get paid out up to a certain amount if the insurer does go bankrupt. So it's basically like having your money in a bank that has FDIC insurance and having your money in a bank that doesn't have FDIC insurance. This is not a flip. It was bought back in 2001 for $580,000. Looks like it was a rental for many years. Used to rent around $6,500 a month or so. Recently they tried getting $8,000 a month back in 2020. Didn't seem like that worked out. Even raised it to $12,000 a month in 2024. Then they decided this year, let's sell it for $3.4 million. Had a $200K price cut so far and no takers. So these houses, man, they just sit on the market. And besides, how many people have $3.5 million to drop on this old house that probably needs hundreds of thousands of dollars worth of work? Just by looking from here, you can see there's paint chipping away, the roof looks pretty old, doesn't even look like anyone's really living here right now. So who knows what kind of deferred maintenance is going on. Now, according to one of the CEOs at one of these non-admitted insurance companies, this company is called Orion 180 Group. He says that the problem with insurance is not these companies, it's that it's the regulators and the regulations that create the problems. And here's the other thing with these non-admitted insurance companies, is they have the freedom to raise prices as high as they need to. There's no limit. The sky is the limit on how high the premiums can be. And because there's basically no oversight with these type of companies, this Orion 180 company was able to grow very quickly. They wrote their first insurance policy back in December of 2022. And in 2023, it was already the second largest non-admitted home insurance company in the US, according to premiums. That's insane, guys. That's like rapid fire overnight growth for this company. And once again, there's too many houses for sale around here, so I'm not going to show all of them, but you guys can probably see them as I walk by. There's another one here. I can see another one straight ahead. They're just all over. And just 2 years later, after this company was founded, okay, it already covers $45 billion worth of property in states like Alabama, Mississippi, Georgia, and North and South Carolina. And they're looking at moving into Florida soon. So like I said, this is not just a Florida problem. It's Louisiana, it's California, it's Georgia, South Carolina, Alabama, Mississippi. I've heard people also write me from Colorado and from Kansas and from Nebraska, different places you wouldn't necessarily think have an insurance crisis, but they do. In fact, in all of these states I just listed, except for Georgia, it's the biggest player, making up at least 1/3 of the non-admitted homeowners insurance market. And they say it's very easy to enter the insurance market in these states because, like I said, there's no oversight or regulation over these type of companies. And it does make you wonder when you see stuff like this, why would any insurance company even want to be an admitted company anymore? It seems like there's no incentive to really be one other than to give people a little more confidence in your company. But other than that, doesn't seem like there's much incentive for insurance companies to be admitted pretty soon. And that's why I'm bringing this up, guys, because this is already affecting people in probably half the states around the country and can continue to be a bigger issue into the future. And here's the problem. Insurance companies like this Orion 180 that I'm telling you about that has seen this rapid fire growth, they just don't have the money to pay out claims if a major disaster happens. And this is the perfect example right here, okay? In 2023, the median risk-based capital ratio of an insurance company was 10.97 according to the National Association of Insurance Commissioners. And for any rating under 2, then the insurance commissioner demands a plan for improvement. Orion 180's risk-based capital ratio is 1.47. So basically that's just way too low. Literally one small storm can put this company completely out of business. So they've just been lucky so far that they haven't really had to pay out a massive amount of claims, and they've only been around for 2 years. So this is the danger of these type of companies when you're signing up with them. You might think, oh great, I'm seeing more insurance companies come back into my market, but I never heard of them. That could be a big red flag. So in case you haven't noticed so far, this type of insurance really is all just designed to be able to give you a piece of paper to comply with your mortgage. You know, it's basically, oh, you have to have insurance, so, you know, we're filling that gap here and technically giving you insurance on paper, and this is going to help you sleep at night, making you think you have coverage in the event of a disaster. But the reality is, if something were to happen, there's a high probability you won't get a payout because there won't be any money to pay out. And so a lot of these non-admitted insurance companies rely heavily on reinsurance. And reinsurance is essentially just insurance for insurance companies. And when you take a look at this chart here, you can see all of the bars that are pink or white and pink are all non-admitted insurance companies. Okay, and they take up the lion's share of how much they rely on reinsurance. There's only 3 companies on here that are admitted that rely heavily on reinsurance. You have Markel, Liberty Mutual, and Progressive. They rely heavily on reinsurance as well. Allstate's way down there at the bottom of the list, but insignificant. So you might say, what's the big deal? At least they're, you know, insuring themselves, right? Then we don't have to worry, right? Not really, because the problem is what you face is the danger of your premiums exploding in this situation. Because they're relying so heavily on reinsurance, these companies will be forced to pass along the extra cost of reinsurance to you, the customer. And that still doesn't give you any extra protection in the event the company goes bankrupt. And here's the reality, guys. Like, these companies are basically not regulated, and this is the insurance market telling you that these properties are essentially uninsurable. You have to wonder, would anybody really buy insurance from one of these companies unless it was their only option left? Probably not, right? You know, you have states like California and Louisiana and Florida. They've all passed new laws recently in favor of the insurance industry, which includes the ability to pass on reinsurance costs to their customers and to avoid more lawsuits and cancel longtime customers, all in the name of keeping these insurance companies in these states. And this is how the politicians view this. They're like, having some insurance here is better than no insurance, because no politician wants to see the day where their state is essentially uninsurable and real estate values collapse and people leave because the local economy collapses along with it. They don't want to see that happen, but that's the reality we could be facing if we didn't have these non-admitted insurance companies. So you could say they play a vital role as well in keeping these places alive, and still keeping them viable for the people who can still afford to pay these premiums. And this gives you a hint also at what's happening with the future of insurance, because just take a look at this chart here. Everywhere on this map, pretty much everywhere, you're seeing insurance increases of anywhere between 15 to 40 something percent here, guys. And all the states in red are seeing at least a 25 to 40% increase in insurance over the past couple of years. Florida is actually not in that red list because we've already seen those increases. So pretty much no matter where you live in the country, you're looking at an insurance increase right now. And if you're not, consider yourself one of the lucky ones. And so this is the main reason, obviously, that a lot of people that don't have a mortgage are choosing to go without homeowners insurance. But I was talking to an insurance agent about this issue recently, and basically one thing that he's noticed that's better that you can do, rather than go completely without homeowners insurance, you can mitigate your risk another way. Because the reality is, especially here in Florida, most of the damage done by hurricanes is caused by flood damage. Okay, that's why so many claims have been denied recently with the hurricanes we had just a few months ago. So one thing that he's noticing, the best thing you can probably do if you really want to hedge your bets being covered in the most amount of scenarios with insurance, is this is what you want to do. You want to have a regular homeowners insurance policy minus the wind policy, and then also have a flood policy. This is going to be better because, number one, it's cheaper, and two, it's going to actually cover more of the probable losses that you might incur as a homeowner, because you're protecting yourself against flood, number one, which is the most likely scenario, especially here in Florida, but really all across the country. A lot of people think they don't need flood insurance, but it's still one of the most common things that people end up not getting covered for because they didn't have flood insurance. And then if you have regular homeowners minus wind, then you're covered for everything except for wind damage. And basically, in the event of a hurricane, the most likely wind damage your house is likely to receive is a tree falling on the house or something like that. You're not going to see your entire house get blown away or your roof fly away. Wind could be a much more dangerous thing to worry about if you live in an area that's prone to tornadoes. But the building codes here in Florida, for example, were updated a long time ago, ever since we had Hurricane Andrew, and people losing their roofs was an issue then. So this shouldn't really be a problem if your house has gone through those necessary renovations, or if it's a newer house built after 1992. But he thinks, not carrying insurance is really foolish because, a lot of other things happen. Most of the significant claims don't even relate to hurricanes or flooding. They're things like, usually ends up being a fire or a bursted water pipe, something like that, or maybe even a liability claim. And the thing is, most claims are going to be too small for it to actually make sense for you to make a claim. So most time you're going to end up paying for a lot of these smaller claims out of pocket because of your deductible. But the big catch to all of this is that if you have a mortgage, you likely won't be able to drop your wind coverage. So this tip mainly applies to people who say, well, I'm just going to go without insurance entirely because chances are I'm not going to get paid out when something happens, which I understand that mentality given everything that's been happening. But my insurance guy is saying, listen, the better route is to skip the wind insurance, which is going to cost you a fortune, especially here in Florida, and just stick with flood and regular homeowners insurance, and it'll be far cheaper, and you'll be covered for the vast majority of things that might end up happening. But man, what a time to be a homeowner, huh? Seems like people had it so easy for so long, and now people are just facing one financial cliff after another. In fact, I just read about in the UK, about 4.4 million mortgage borrowers are facing a higher loan repayment over the next 3 years, according to the Bank of England. We've already had about half of these people have to refinance now already because remember, they don't have very long mortgage terms over there. So these people are seeing their mortgage payments climb significantly because of this. And according to the Bank of England, they say about 37% of fixed rate mortgage holders haven't needed to refinance their deal since borrowing costs started going up in 2021, which will result in about 2.7 million homeowners over there, which is about 31% of all mortgages that have to move up to a mortgage that's more than 3% borrowing costs for the first time ever. And an estimated 420,000 people will likely see their monthly payments go up 500 British pounds or more. And you know, I've heard about these stories before in Canada and in England, where you guys have to refinance every few years your mortgage over there in most cases. So I know that's an existing problem, but let us all know in the comments, if I know some of you watch from these countries, if you guys are facing this monumental insurance crisis like we're facing here in the US. Everywhere I turn around, there's a house for sale, guys. I must have walked by at least 10 houses for sale in this video, and I can't show you all of them. There's just be too many. And one other thing, I just ran into a fan of the channel that actually lives in this neighborhood, and I don't think he wants me to put him on video, but I asked him how much he pays for insurance since I was just talking about this, and I think that's why a lot of these houses around here are for sale. And I asked, is it, you know, north of 20K a year? And he says, getting close. So just to insure a house around here that he bought 12 years ago, by the way, you're just paying basically $20,000 a year in insurance. And you know you're gonna be paying a lot more than that if it's one of these waterfront houses, or if you just bought it because the house gets reevaluated and all of that. So just imagine, guys, everybody in this neighborhood is probably paying anywhere between $20,000 to $50,000 a year in homeowners insurance, maybe even more for the biggest and most expensive properties. So let us all know what you're seeing in your neighborhood when it comes to these crazy insurance premiums. I know a lot of people are getting lucky. I've had a couple people actually write me emails saying that their premiums are going down in 2025. So you're definitely one of the lucky ones. And you probably don't live in a very risky area with natural disasters either. So congratulations if that's you. Unfortunately, the premiums will likely continue to climb for everybody long term due to everybody that does still live in these areas. But if you guys enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.